show for your Tuesday afternoon edition. I had very little time to even look at the market today. I was teaching a class from 7 a.m., well, literally 6:30 when I got prepped for it, all the way through 1:30. So it's been just a whirlwind of a day. My throat will probably go out here on you guys, so my apologies if my voice starts cracking, just because I've been talking nonstop. Online classes are tough because you just talk and talk and talk. I had a couple people in there that were participating, but for the most part, people were just kind of quiet in there. So it was a rough one. But I did get a chance to look at it aftermarket, and not the best, certainly not for me with my MicroStrategy and crypto, but we'll talk more about that as we go today. So because I didn't have a ton of time to kind of analyze and make trades today, I just grabbed some questions that came through the mailbag, if you will. Volume's a little low. It does look a little bit low. You know what? Hold on. The computer rebooted. Appreciate you saying that, Tofi. Let me go and look at my settings here, because sometimes when this thing reboots, it decides to turn my microphone levels way down. And let's see. You are correct, sir. It dropped it to 40%. This is where it should be. Thank you, Tofi, for that one. Yep, we got it now. I guess my computer restarted and left me with poor sound. But now we got better sound. I can see the needles popping a lot more. Great. Thank you for bringing that to my attention. There we go. Okay, so I was going to do just some questions that came in. So we'll do a little Q&A. And of course, if you guys have something you want me to discuss today, let me know. Margaret, I did not reach out to Scott McCormick yet. I will do so today. I'm going to see if I can get a couple others on the program. As I mentioned, hopefully some engaging content going forward. Now, let's look at our first one. So some of these, two of these are pretty basic. Thomas says, I'm new to trading and would like your thoughts on the best trading style for beginners. This is going to be an interesting discussion, Thomas, because everybody has their own way of discovering what their style is. Now, unfortunately, I think the big challenge is that most of the people who get started like yourselves, you're probably out on social media sites and you're probably following and getting drawn into influencers like, Timothy Sykes or Warrior Trading or somebody that may give a false impression about trading and investing, and also, I think, lure people into an expensive program that may not really give them much value. So I would start, if I had to go back all over and do it all over again, I actually I do like the Trading Academy approach, which is let's focus on supply and demand, understanding the driving forces of what moves price up, down, and sideways. Now, a lot of what I like to look at is patterns, but as we discovered today, patterns don't always come through. Yesterday, we had this thing called a tweezer bottom, which was supposed to have a nice big follow-through rally today. Well, we gapped up and pretty much sold off the remainder of the day. So they don't always work, but I think when you're looking at trading, I guess I would go back and tell myself, understand that what I'm looking at is behavioral analysis. I'm looking at how people react to price movements, to news, to data. And ultimately what will happen is those patterns are repetitive. Just like most actions in our lives, we have these repeated patterns over and over and over again. So I think the more you look at price action, the more you understand how price action is driven, mainly by institutions and retail investors, then you get a better sense as to when to buy, when to sell, and time the markets. Now, as far as style, because I saw Margaret say not day trading. Yeah, I would, knowing what I know now about day trading and how I traded in the past, I think for the most part, day traders are going to lose money. Remember that the big difference here, and I'm not quite sure if that's what you're asking me about, is trading style, or you're talking about, using indicators or using MACDs or, a volume weighted average price model. Like what style are you asking for, Thomas? If you're here, let me know. If you are looking for the four kind of main styles, which the shortest term would be day trading. Then you go to swing trading, which is a couple of days, maybe a couple of weeks. You have position trading, which is longer term. And then I could just call investing is just stuff like, years down the road. I've personally found what fits my style best today is swing trading. I like swing trading, basically going over a couple of days to a couple of weeks. Depending on the account, as you know, I have several accounts that I trade. My main ones are, one of them is a weekly option strategy, which is pretty much doing the wheel strategy. I'll go long if I find pretty big discounts on something. And then the other one would be kind of a wheel strategy on a monthly basis. So swing trading for me is the best. And I think part of the reason I like that is it doesn't give me a lot of time for things to really go bad, right? if you have a position on and you're holding it for months and months and months, there is the possibility that thing could drop 30, 40, 50, 60% over those few months. And you're like, oh, well, it's going to come back. And now you're in a massive losing position. So I personally do like the swing trading. I like just a couple of days. If you see a great setup, go for it. And here's the thing. If you have a swing trade, which is typically where you're looking for an entry, stop loss, and price target, you got a 3-to-1 reward to risk ratio on that trade. Ideally, you can do whatever you want. I know that if I'm risking $100 on that trade, that's my stop loss, then I should be trying to make $300 at least. However, I also know that I'm not going to lose more than $100 on that trade because I have a stop loss in place that says you're out. On the flip side of that, I'm not limiting my upside potential. Yes, I may have set a 3-to-1 target. So if I'm risking $100, I'm trying to make 300. However, depending on the momentum or how things are moving at that time, maybe I sell out of half my position and let the second half run once it reaches that 3-to-1 target. And now all of a sudden that second half could turn into a 5, 10, 15, 20-to-1 winner and really help me with my rate of return. And that's been something that's been very helpful to me this year, is letting things run and not getting them called away too quickly. The runners have really just made for a great rate of return for me for this year. So I don't like long-term position trading. I think you have to rely a lot on fundamentals and really understand the companies, the balance sheets, the products. I don't really care for that type of stuff. Honestly, I really like just want to look at the price chart and say, where do I feel it's going to go over the next week or two? You know, you look at our current situation here, and I was really optimistic we're going to see a nice rally for about the next week. And fortunately today I wasn't in front of a computer to trade because I was teaching all day. I probably would have been picking up some stuff that was discounted, expecting this rally, and all of a sudden we turned back down here. So not the best for me, even though I wasn't trading. I didn't make any trades today. Other situations where you look at something like Bitcoin. You know, Bitcoin had a similar situation. We broke down some pretty key levels, and now all of a sudden it looked like we were coming back up, and then today just gave it all back and actually made a new low today, which is not good. So that has me a little bit bearish on Bitcoin, probably, as I mentioned, going down to about that 109 level. I hope we do not, but you know, those are the swing type of ideas where I'm eyeballing different levels and trends and factors which might push price to different zones or levels. So, Thomas, that would be mine. And again, I don't believe there is a best style. Ultimately, what I've learned over the years, and I think my audience would definitely nod their head to this one, is your trading style will become an extension of your personality. So if you, Thomas, you know, if you're 21 years old and you are high energy and super active, you're probably going to push yourself more towards day trading because you want instant gratification, right? You're the young bull on the top of the hill. You want to just boom, 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 make some trades. Well, statistically, most day traders are going to lose money because you're just churning your account. The good news is there's not a lot of commission costs these days for short-term or for equity trades, but you still been doing lots of transactions. Swing trading has worked best for me. I'm a little more calm, collected now that I'm a bit older. In the younger days, I was a day trader. I don't think I'll find the day where I become a long-term investor, swing trader, just not, except for crypto, right? Crypto, I'll do the long term. So that would be my suggestion for you there, Thomas. The other thing I would say is, at all cost, try not to complicate things. You look at a lot of companies that are selling some software or some subscription service. I don't believe that you need that type of thing. Understand price action. Focus on the charts without any indicators, without any tools on there, just price itself. Someone will try to sell you an indicator combo that does this and gets a great rate of return and red light, green light systems. I don't know. I'm not a big fan of that. I think that you should really understand what price does. It might take a little bit longer, but you'll have a much better read on markets, and I think that will be the piece that gives you longevity. Now, Thomas, you don't say how old you are, but that was example if you're in your 20s. If you're in your 50s or 60s and you just don't want to spend a lot of time in front of the computer, maybe you are going to be doing more longer term trades or using options and doing that wheel strategy like we've talked about here so much. So hope I answered that question there. I'm not sure if I did. All right, let me go back through here and see what we said. Bad EV news today. A lot of the EV companies not doing so well today. I saw Lucid lower forecast as well. Risk with swing trading is having a strong bias and doubling down being wrong. Right, which is why you always have to have that stop loss and adhere to it, right? How often have we, I'm saying for myself as well as others in here, when you're down to your stop loss, you're like, I know it's going to go up. And he's like, I'm just going to buy a little bit more. I'll double down here. I used to do that a lot in my younger days, and it usually doesn't pan out. All right, sees that I have certain accounts. certain accounts that are just long-term stock positions. I also have short-term accounts. I don't mix them. Correct. That's another thing I've been saying for the audience for a long time is you should never mix like a day trading account with a swing trading account with a position. Have very specific accounts for each one so you know the rules and write those rules down so that you know here's what I can and cannot do in specific situations and in the different accounts. Bears were at one today. Bought Bitcoin and NPH. Rolled my Mara. Okay. You had. I mean, a Bitcoin wasn't that bad. We're down 1%, not horrible. Because I consider those longs to be investing versus trading. All right. What else I got here? Most young people don't have much capital. And that's another big factor here because I think that you're right, Tofi. And a lot of young people are going to try to go towards the day trading, get rich quick philosophy. I was fortunate. I did have some working capital when I started off trading, but I was still rather aggressive. And I don't think that I should have been as aggressive as I was in those days, but hindsight made me better. I believe that was a learning lesson for me, and we're okay today. As Rob says, plan your trades, follow the rules until the bend at the end. Yep. So Thomas, when you say trading style, I like swing. As far as strategy, that's open-ended. I would just say keep your strategy very simple. As Margaret says, stop loss. I start with entry because that's the axis, that's the determinant for your risk and your target. So entry, stop loss, price target. I know some people call it set, SET, but I think the entry price is so critical in establishing your risk and establishing your target. So those are the key pieces there. And I guess this is kind of ties right into it from Rosalind. It's kind of a similar question from Rosalind says, yeah, I put entry, stop, and target is kind of the priority for me. Because without an entry price, Margaret, I can't establish what the stop is. With all your experience, what are the most common trading mistakes people make? Man, they make them all. I think the audience just actually brought up one, which kind of goes to Walker's comment about capital management, and that is, doubling down on losing positions. One thing that was difficult for me to wrap my head around early on in trading, and I have no problem with it today, is that I know I'm going to be wrong today, and it's okay. If I'm wrong, I just pull the trigger and take a small loss. Back in my 20s, I refused to admit that I was wrong. I'm not wrong. This market's screwed up. It's got to go the direction I believe it's going to go. And that type of mindset, when you have this I am right, the market's wrong attitude, will vaporize your accounts really quickly. So big common mistake I think a lot of people make is they have this attitude that they're right and the market's wrong. Just remember the market is always right. It doesn't matter what happens. The market is the one that was correct. The market is the one that did the right thing. You just misread it and didn't act on it. So unfortunately, I don't have my 10 laws. I have a sheet that has my 10 laws on it somewhere around here, but I cleaned up the office a little bit. And you talk about the most common trading mistakes people make. My list is a reflection of the biggest mistakes that I've made. And on that list, you have trading way too big a share size. You get a little bit overzealous, you get too overconfident, and you start to step up your share size from, let's say, 100 shares, and now you're trading 5,000 shares real quick. To me, that's bad. That is a very bad thing, trading too big a share size, because obviously the emotions are very different when you trade 100 shares versus, let's say, 5,000. Adding to losing positions is another big one, which we already talked about that. One thing that I talked about the other day was if it's not necessarily a mistake, it's just you have to be in the right mindset to be a trader. You have to think the right way. And it can be taxing on your brain to always kind of be focused, and you can be very distracted. As the audience knows, I have been, we will say, very distracted with what's going on in my personal life. So my trading I've cut way back on my trading. I'm still making trades, but I'm not at the same volume that I normally would be. I like to trade fairly large positions, and the last 3 weeks I have not. I've been actually really mild, and the reason for that is by the dip says I'm distracted. I can't stop thinking about things, and I'm not focused. Just like I would argue that a Formula One race car driver, if he's not focused on his driving, he shouldn't get in that car. Well, it's not much different for what we do is as a trader. Things are moving very quickly. We have to be quick to make decisions and judgments and assessments of a situation, whether it's a short-term 1-minute chart or even a weekly chart. We need to be able to be, snap the fingers, make those decisions without any hesitation. And if you're preoccupied with something, in my case, it's, personal issues. In your case, it might be you got in an accident, you're fighting with your girlfriend, or you don't feel well, or you got COVID, right? Those types of things. Stop. just stop trading or scale way back and go down. I think that's another big common mistake. Another one, which I think is a massive one, and that is putting your thoughts, hopes, and dreams on a quote-unquote professional, an industry expert, someone who claims to be so amazing and is out there showing you all their numbers and how great they're doing and how much money they're making. In my experience, a lot of times those people are charlatans, and they're using simulated trades to give the illusion that they're making tons and tons of money. And they'll show you, here's all the trades I made. It was on simulator. It was a back testing of a moving average crossover system and made a bunch of money on a certain parameter. They printed it out and showed it to you. I think you've got to discount the people that are boasting. Warrior Trading is a good example of that. Every ad they run, I made $100,000 today. I made $50,000 today. Bullshit. Sorry. BS. If I don't like associating, honestly, with traders who boast about their gains, how much money they're making. I've mentioned this before. On the trading floor days back in the late 90s, there was a group of about 7 of us in this back little corner. And that group made so much money. It was crazy, right? They're extremely active. However, when you peeled back the layers of the onion, there were only like 2 that I know for a fact, because I watched them every single day, that were just absolutely crushing it. There was another 1 or 2 that were like streaky, and then one I think was just net losing money. And the one that I really started to change my style and wanted to emulate, I won't mention his name, called him Big Red. Every day he would trade the same thing. I think it was Cisco at the time. And he'd grind out about $1,000, very low risk, almost every single day. And he would just get up, turn his computer. And I could see his P&L on the screen. He'd get up, walk away. Sometimes he'd make 2 or 3 again, but he would just walk away and never really talk about it. Whereas I mentioned, Adam, the young kid who made $60,000 on ABC World News Tonight, was always boasting about how much money he's making. Oh, I'm huge. I'm up 60 grand today. High-fiving everybody and buying you drinks at the bar. And then the next day he's super quiet and angry because he lost 50 grand, right? I don't need those giant oscillations in P&L. What you want is a slow stair step up. Obviously, a couple jumps every now and again are great to the upside, but that's another one. So yeah, as people saying here, don't watch social media. Don't follow social media. I actually follow social media just for kind of industry updates from people I do feel give good information. And other than that, I don't watch CNBC or Fox or Bloomberg or any TV shows. I don't watch anything to do with finance out there. I don't want to be swayed or manipulated by their orchestrated opinions. And there are scripted opinions that are done on these TV shows for these analysts, and I'm not a fan of that. So Rosalind, I think that's kind of what I would say is some of it. What else did you guys say? I see you got quite a few. Sorry. Paper trading. Oliver, paper trading, my take on paper trading. I think paper trading is probably okay for someone just starting out, just to get some skin in the game. But, if you're paper trading and you're trading, let's say, 1,000 shares of Apple, and then you go into real world and you're trading, 100 shares of Apple, then you're fooling yourself. Whatever you're going to do in paper trading, you should do in real trading. And that it goes for stop losses, picking your targets, all that stuff should be very structured and kind of not differentiated between real and paper trading. I believe personally that paper trading gives people false hope. They'll go out there, they have a $500 account or something, and then they're trading 3,000 share blocks of Amazon, thinking, oh, wow, look, I made 20 grand today. You didn't make anything because you don't even have that kind of money to buy 3,000 shares of Amazon. You got like $1,000. Who are you fooling? So I think also having realistic expectations. One of the things I talked about in my class this morning was realistic expectations are that you're going to get an average annual rate of return for the S&P 500. It says between 8 and 10% between 1950 and today. Okay, well, the numbers are certainly getting skewed because we're having way better years than that. But if the average annual return is 9% per year, then what makes you think you're going to take your $1,000 brand new futures trading account and turn that into $10,000 by the end of the year? A 10x? I don't think so, right? So realistic expectations are also very important in this. And sadly, social media and influencers have created this illusion that anybody can start trading and all of a sudden you're making 50% rate of returns per month because that's what they're boasting about. We all know, this whole audience knows that that's a lie. To get 50% rate of return per month, you'd have to take some serious risk. You're trading stuff that's so risky that one bad trade will erase everything that you've done for month after month after month. So it's about being humble, about having realistic targets and expectations. I think most new traders believe that this is the ticket to easy riches, and it's not, right? I think my audience would be nodding right now. Go, this is not a path to easy riches. It's hard work. It takes some time, but yeah, it's challenging. All right, sorry, I'm on a rant. It's got to be spendable profits. Okay, let's get some more. Try to pay your bills with paper trading. Yeah, good luck with that. Chad says, might AI change the fiat money system, reduce printing money? I don't know if AI changes that, but I think digital assets does. I can think that's that. Jim says, I can 10x that, just buy my course to see how, right? Yeah, I mean, if you look at Warrior Trading, I don't know how this guy is even staying in business. I don't know how he's staying in business. He's making fraudulent claims, in my opinion. If you go to his YouTube channel, it's just every page is like, oh, $100,000 today, $1 million today. It's like, no, dude. You can't tell people that. That's in order to make a statement about your earnings, you have to give what would be considered the average results for the consumer. There's no way these guys are making $100,000 in a day on trades. Not a chance. Let's see. PT Barnum, suckers born every minute. Absolutely, Mamon. Absolutely. All right, I got one more, and I'm curious about your guys' input on this one. This one was, I don't have an answer for this one because I don't really look at news. And the question was from Bryce. He says, what's the best place to get news for trading? I will say my part, but Bryce, if you're here, look in the chat because everybody here is going to get their news from different places. Here's where I get mine, and people laugh at me for this. Yahoo Finance. Yahoo Finance. And the reason is I want to know what the sheeple are being fed, right? What is the average American being pumped into their brains from a news perspective? Not that I believe all that news. I just want to know what they're being told. So I definitely think just a regular, simple, I think Yahoo, it feels to me like Yahoo is kind of straddles both sides. They're not biased. If you go to Fox or CNBC, or CNN, they can become very biased on which side of the aisle they're on, and then the stories become rather biased, which I don't like. Mamon says Forex Factory. Yes, I always look at Forex Factory, and that's really just for economic announcements to know when they're coming out. And the data there is provided by the different government agencies for that. So Forex Factory, yes, definitely Forex Factory. I also like just having a simple earnings calendar. So I use Zax.com for an earnings calendar, but it's okay. It's not the best. It's okay. Let's go here and go to Forex Factory. Oops. There we go. So we'll go to Forex Factory here. Hey, Don, how you doing? This is a pretty decent site for the calendar. This is what I don't really go look for the articles, but looking for the calendar, I do. Looking today and watching that ISM Services PMI number come out, much worse than expected. Okay, that's where I like to get my news. But some traders in the past have have presented that they'd much rather have like a Bloomberg terminal. Look. Yes, Bloomberg Terminal can probably get you faster data than most retail news sites, but you got to pay an arm and a leg for it, and it is a very difficult system to operate. It's difficult, not the easiest thing to work with. So I'm a fan of the simple news because when you break it down into its core, what am I trading? I'm trading the price of these securities. I'm trading their action. I'm trading the way they're going. So AMD today. AMD looked fine today, and then oh wow. Hold on a second. Wow, you talk about screaming back. This thing was at 165 earlier. It was down pretty big and now rocking back to the upside. I'd rather just trade the price on the chart. More importantly, I'd rather know when the news comes out. Like today, obviously, we know that the earnings announcements were coming out today after market hours for AMD. Great. That's more important than what the actual numbers are because I can prepare for it. And that's tough. That's really tough. Future Trader says, not advertising, but I do use Bazinga Pro. That's cool. It's not advertising, man. If it's something that you use and you find valuable and it's helping you in your trading, then you should share it. I mean, Bryce wants to know what's the best place to get news. I would argue it's hard for us to make that blanket statement of what's the best place because we all look at things differently. We're all looking for different information. I, for one, don't like news because when you look at news, it's scripted. It's written to present the facts as that editor or author intends them to be presented. and it could skew the biasness of it. It might not even be accurate because the author is skewing the data. So for me, I don't like looking at news. Just like I don't really listen to other people's podcasts. I don't listen to other people's shows because I don't want to be swayed by their information. I also want to be accused of copying someone's style or doing something else. So I really don't watch anything out there. I'll watch Don's show occasionally. Every now and again, I'll jump in there and say hi. Sometimes I watch John Rowland's show as well, Market on Close on Bar Chart. But other than that, I really don't like news at all. I think it's just designed to manipulate you and get you biased one way or the other. All right, so have you ever looked at Financial Juice? I have not. Let's see. I listen to Trader TV, live TV on YouTube. They report on news and day trade live. I use it to gauge market sentiment. Okay, cool. I think I've seen that before. I don't let news change my analysis, though, only to be aware of prices moving. Exactly, and that's what I try to do. I just want to be aware of what the news is and see how that might be digested by the populace, and then I'm trading off a price, period. All right, last viewer question I have, and then I'll go back to run through our markets here and see what you guys have to say. So last one was from John. He says, is Bitcoin still going to 250 as you predicted? 250,000, I think, would be the target there, not 250. The answer is 100% yes. I think 100% yes, Bitcoin is going to 250,000, but is it going as I predicted? Or as, I hate the word predicted, as I forecasted. I'd rather use the word forecasted there. So John, let's revisit that. And based off the math behind Bitcoin, yeah, I hope not 250. But yeah, let's go. Maybe I should change the screen there, add some zeros. If we look at the pattern that's going on here with Bitcoin right now, and I'll have to shrink this down to get to 250, it does not seem very logical. Let me change this to logarithmic here real quick. Okay, so there's your logarithmic version of it. And given the fact that we've had this little sell-off here, it sucks. We had the initial breakout. We were kind of looking at this like a flag pattern. 250 would have been about there. And I would have been okay with that. Remember, I'm also targeting November, so I need to go all the way into November, which would be here. Okay, so I'll do mid-November. I don't believe, personally, that red line I just drew on there would be an outlandish, ridiculous forecast for price. I don't think that is that crazy, especially when you look at the move that happened here in April of this year. That was even more, that was even steeper. Now, if we go from where, the longer we go sideways here or down, now you're gonna have a pretty massive catalyst. So I'm starting to lose faith in my target of 250,000 by November. I do think we'll see more upside moves. I think that it's just kind of built into the political acceptance of crypto and Bitcoin in particular. We do have, again, the Genius Act, which will really start to impact things next year. You also have the Clarity Act, which is coming through. I think a lot of these are going to be good for it in the long term. But is it going to hit by November? I don't know. I'm starting to lose faith in that. I'll still hold to it, but if you go from where we are now, does 250 look more reasonable in like November of next year? Yeah, of course. The trajectory isn't as steep, but over the long haul, the price trajectory of Bitcoin keeps moving up and up and up. Don says, mine was 170, but I don't get into the stuff everyone else does. You try to keep it simple. That's okay. What cycle is ending while one just beginning? I saw some back and forth about Bitcoin up is about done, and the Bitcoin is just starting its 4-year cycle. Well, technically that 4-year cycle doesn't start till November, right? It's been November or in December every year, so right around in there. So that's why I was kind of targeting November as the peak, and I was looking to move mine off of exchanges right around September, October, and putting it on exchange with some stop losses in place just in case it does start to sell off. And as far as, let's go back to a normal chart here. As Margaret says, how about a downside Bitcoin target? Well, right now, that's the 109 level I'm looking at. I think that's definitely in play. I think 109 could certainly get hit here. It's just not feeling like it's got a lot of strength, although there's not a lot of follow-through to this sell-off that we had 2 days ago, right? Wouldn't the halving affect the cycle? Yeah, typically. But if you want to know when the next halving is, the next halving, we got a long way to go for that, right? The next halving is in 2028. That's like it's in here, way off. We got a long way to go before we get to the next halving cycle. We just had one in 2024 in April, so it should be right around April of 2028 when we get the next halving. So that's not a factor at this point. Based off that 4-year cycle, what should happen is we should get a blow-off move up until November, meaning like just crazy rocking to the upside. And let's just leave it there because there's November. And then typically what happens is Bitcoin has a 70 to 80% slide. We'll do 75 just to call it a nice even number, which puts Bitcoin over the next 12, let's see, it's got to be 365 for the next year. From November of 2026 to November of 2027, from November 2025 to November 2026, it should do nothing but sell off to about 75%, which would be here. And then based off of historical stuff, it'll have a slight increase for about a year and a half, and then rip to $1 million. But, that's all historical stuff. It's very historical. So the 4-year thing isn't bullish. Well, it is very bullish. It just depends on where we are in that cycle, in that window, right, Don? Because if you're in the beginning of it, the first year is extremely bearish. The first year of a new 4-year cycle is nothing but down for 12 months, almost every single time. If you look at the last year of the 4-year cycle, which is what we are in right now, we're literally in the last, what is it? It's August, September, October, November. We're last 3 months. We should be going parabolic right now. But it didn't happen. And everything works until it doesn't. And I'm still going with the patterns. Because it says, and I go, with all the institutional money in Bitcoin, things may not follow that cycle going forward. And I agree with you, Big Ep. I think that's the tough part is I'm looking back historically saying this has always happened, but this time's different. We've got too much government intervention. We got too much political tailwinds, in my opinion. So I don't know if this 4-year cycle will work. I'm getting prepared for it, and if it does start to show up, hey, I'm happy to ditch my stuff. Remember, I don't think that the 4-year cycle is going to end like normal because of something to do with politics. I think it's going to be literally the paper Bitcoin that's being created by Coinbase and Fidelity and these other institutions. That paper Bitcoin that's not actually Bitcoin, but they're selling it. I think right now, I have no clue, but if we say that there's only 20 million Bitcoin in existence right now, my guess is, of actual real Bitcoin, my guess is probably close to 40 million when you add in the paper side of it. The leveraged journal entry stuff created by Coinbase, Kraken, Binance, Gemini, Huobi, KuCoin, right? They're fractional reserve lending out cryptocurrency. There's just simply no way Michael Saylor can buy $5 billion of a crypto and it does not move. There's no open market for that with that kind of liquidity. It's just not there. So anyway, John, no, I don't think it's going to go to 250,000 as I had anticipated or forecasted. I hope it does, but probably not. Do you think that the recent judgment against Tesla for $230 million will dampen long-term prospects for Tesla? No, I don't. Nope. I think blip on the radar. They got plenty of money. They got plenty of products. I don't think that's a big deal. Okay, let me go back and just kind of run through our top 8 here. What time is it? Okay, we're already halfway through. All right, so I'm going to start at the bottom, work my way up. Crude oil. Man, I talked about this yesterday. I was so eager to maybe sell some puts on USO, expecting this to kind of stabilize here. But the way we fell even deeper into that zone today, and it's hit so many times, it just really makes me feel like we're going to see crude oil break down below these levels. It does not look good right now. So the low end of that zone, it's not really that greatly drawn. Sorry, it's kind of messed up. But you look right around 64.50. After that, I think you're going to flop pretty quickly down to this next zone, which is right between 63.41 and 62.17. So I would anticipate crude oil having a bit of a drop here. I wanted to sell some puts, but no, not going to do it. Feeling a little too queasy on that one. Bitcoin, we already looked at that one. Again, I'm not happy with the way that the price action moved today, especially after yesterday, but at least we're kind of stabilized a little bit. We'll see if we can get some momentum and get this thing to move back to the upside. Your NASDAQ. No follow through on that tweezer bottom. We gapped up and then just basically sold off all day down 0.71%. I don't think that this paints a real negative picture. I know some people feel like, because we didn't get follow through, NASDAQ's going to tank. I wouldn't say that. I don't think that that's necessarily the case. I would maybe put a line across these lows that we've established on the past few days, which is going to be right about here. And, that number at 22,775 would be the number that I'd be looking at on the NQ says, okay, that's my trigger for we've reversed our trend here and we're starting to see some downside move. But we should probably hold here and continue to move up. And the same thing on the S&P, right? I've got that same line drawn. And until we get below 6,246, I think we're still okay on the S&P. Dollar index, not a lot to say there. You had a long topping tail, so it was trying to rally back up today, but then just gave it all back. We were up 0.04% in the Dixie, but at one point we were up a lot more than that, unfortunately. Gold, your third place finisher. Technically, nothing really exciting here other than, again, we talked about this several months ago that gold has just been traversing sideways. I hope some of you are out there doing some spread trades on it because this has just got to be easy money right now. Just keeps bouncing between 3270 and 3400, 3450. Just bing, 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 back and forth. And here we are kind of getting near the top of it. It's starting to look better, but still just range bound. So not excited there about gold at all. You had the 10-year yield jumped up 0.33%, but that's really nothing compared to that giant sell-off we've had a couple days ago. So all in all, your Russell 2000 took center stage and was your leader today at 0.54%. 2,232 is where it closed at. Oh boy, Russell back in the yellow box. And really not much else there to talk about. I was looking at that Magnificent 7 today, and I didn't see anything here that was overly exciting either. Only one that was up today was Amazon. Of course, I do have some puts, or I sold some puts on Amazon at the 210 level, so fine with me. Just, hey, I'm cool with that. I collected some good premium on it, over 1%, I think, for the week, and we'll see what happens on Friday as that one closes out. I know, only Amazon is up. Everything else looked bad. Meta down 1.6%. Microsoft is down 1.4%. Microsoft looks to me like it's going to close this gap that it established back on July 30th, so I wouldn't be surprised to see that close the gap. NVIDIA finally having a little bit of a rest here for the past couple days as it just vaults to higher highs. I mean, at one point on NVIDIA, we were at $183. You can see Big Eb's forecast. He thought that by February of next year we'd be at 175. Man, racing. You might have to revise your forecast there, Big Eb. What are you going to call it, like 250 by January now? Google. So Google, the only reason I wanted to bring up Google is it's got a massive shooting star. Like a great shooting star. Not that those always follow through, but you guys know the rules that I follow for a shooting star. Right now, Google is trading at 194.73. If it opens up tomorrow above 194.68, and then after the market opens, it sells off below that, there you go. I think you had a great shorting opportunity on Google. Apple was down 0.21%. Apple's been looking weaker than most of the other Magnificent 7, but still only down 0.21 on the day. Tesla, we already talked about that one. Really an indecisive day. Pretty much sideways and just kind of choppy chop. And then finally Amazon, the leader to the upside here. Shooting star, let it run some more. Let's see. We'll hope so. Closed my Google long call. Took whatever profit it gave me and thought I would get back in another time. There you go. As they say, you won't go broke taking a profit. Let me go into your economic calendar to show you what's happening for tomorrow because we do have most stuff coming out tomorrow. For Wednesday, we have basically a bunch of FOMC members speaking. You've got Collins, Cook, and Daly will all be speaking. We do have crude oil inventories coming out tomorrow as well. Typically that's on Thursday, but it's going out on Wednesday this week, and that's pretty much it from the economic perspective. And on the earnings front, we could look at what happened today. There was some interesting earning numbers today. I know AMD was the exciting one for Tuesday. You had AMD, they actually just barely beat earnings, and they really leaned into AI, of course, as everyone is doing, and we're still, down, it says down 2.29% right now. But you had Caterpillar, they missed earnings. You had Amgen beat earnings, Pfizer beat earnings. So there's some pretty decent earnings today. And for tomorrow, as we round out the calendar, I'll sort them by market cap. You've got McDonald's, Novo Nordisk, you've got Disney tomorrow, Uber, Shopify, Sony, and DoorDash. Oh boy, DoorDash. Todd Davis and his DoorDash. He loves some DoorDash. So that's pretty much my shtick for today. I'm exhausted. I'm gonna go and take the pup to the park. I'm gonna get ready for some trivia for tonight. So thank you guys for the show, John. Let me run through our questions here. John, Bryce, Rosalind, and Thomas, thank you very much for those questions today for our trading Q&A. I hope I did answer those adequately for you. If I didn't, email me at TraderMerlin@gmail.com and let me know if you want further elaboration on those topics. I'd love to talk more about those topics. Are just great for me. I love them. And thank you for those questions. So for those of you who have any other questions that may not have been there, or newbies or my regulars, just email me at TraderMerlin@gmail.com and I'll get to those on tomorrow's show and hopefully have an update about some guests coming back to the program. So thanks, everybody. Have a great evening. I will see you tomorrow.